So the big discussion is the Fed going to cut rates in September? The Fed is the central bank of the US. Now, markets are pricing in over 90% probability that the rates will be cut in September. And I believe they will as well. One big reason is that uncertainty in the market has come down. The reason that they paused cutting rates was because of all the uncertainty that was brought about by the tariff situation. We now have a little bit more certainty on that front, with tariff rates set for major trading partners and sectoral tariffs also shaping up. Now, one reason the market is pricing in such a high probability of cuts is because we've seen weakness in the labor market. The last data print coming out of the labor market showed us that there were several revisions, actually, some of the highest revisions in job additions. On the other hand, inflation prints have been more or less in line. However, you got the PPI data, which is the producer prices data, and that's prices at the wholesale level. That showed a remarkable increase. Now, these producer prices will feed into the Fed's preferred measure of inflation, which is the PCE, and we're likely to see a higher level of PCE. So, what we gather from this is that price increases or tariffs are largely being absorbed at the wholesale level, and soon, maybe 2 to 3 months, we will start to see them being pushed down to the consumer level. However, this does not necessarily mean that the Fed will not cut rates. The Fed has been on a path to easing. It's not like the Fed didn't expect inflation to increase. They've been talking about a one-time price increase. So we expect a 0.25% cut in September and possibly a second cut in December.